Support and resistance levels are known as a universal instrument of market analysis. In this video, we'll discuss our indicator that automatically plots the most important levels on crucial time frames. Horizontal support and resistance levels have been used in trading since the beginning of the 20th century. They are universal and can be used without fitting to historical data. They work because traders think that they have to. Levels indicator plots support and resistance levels that are based on price patterns appearance, which suggest that there is a local price reversal on the chart. Such points are considered at the base of horizontal levels. Support and resistance levels are not one-point thick lines, so one can see that levels indicator plots price zones where the market move can slow down or price reversals are likely to occur. Levels indicator includes 28 price patterns that complement each other. If a pattern allows us to plot support and resistance levels with not more than 2% error rate on different timeframes and assets, we include it to the indicator. According to one of the characteristics of support and resistance levels, if price comes closely to an important price level, the market move may slow down and correction or even trend reversal may occur. It's extremely important when one analyzes price levels on large time frames. For example, if one looks for entry points on 1 hour time frame, it would be wise to take into account at least daily and hourly levels. If market comes closely to daily level, the trend on 1 hour time frame may slow down or even reverse. If the market moves into a support or resistance zone of the major time frame, the price may pull back, the trend may reverse or transform into a flat. This occurs as a result of profit-taking and active counter-trend trading, which occur near significant support and resistance levels. In this case, the balance between buyers and sellers shifts, and the market tendency slows down or reverses. Therefore, support and resistance levels on large time frames may be considered as primary targets, whereas levels of current time frame may be used to calculate reliable stop-loss and take profit. The properties of support and resistance levels are applicable to any time frame, and the less the time frame, the more levels one should take into consideration and replot. As a result, the process of market analysis on less time frames is more complex and labor-intensive. For example, in case of mid-term trading on daily time frame, one should consider levels on daily, weekly, and monthly time frames. In contrast, if one searches for entry points on 5 minutes time frame, the minimal set of levels to analyze consists of 5 minutes, 1 hour, and daily. There are more levels and they should be updated more often. This indicator plots support and resistance levels on the selected and lower time frames. For example, daily levels are shown on daily 4 hour, 1 hour, 30 minutes, 15 minutes, and 5 minutes time frames, but they are not visible on weekly and monthly time frames. It's a very handy feature that lets you keep charts as clear as possible while switching between different time frames. Moreover, it helps save time, which you would spend in case you decide to plot and set each price zone by hand. Short-term trading can also take much energy and time because the situation at lesser time frames tends to change very quickly, so one should act urgently and exactly. For example, it takes from 10 to 25 minutes to form a new support or resistance in order to seek for entry points on 5 minutes time frame. In this case, price levels should be replotted at every trade session. Support and resistance levels indicator can simplify this task significantly, and it can also provide you with the opportunity to focus on market analysis instead of constantly plotting of major price levels. To buy the indicator, please visit optionclue.com.